we definitely are still looking at Apple as a mainstay in the portfolio. Still definitely a racehorse. And part of that reason is because we're looking at the long term. That's part of our strategy for all the companies in our portfolio. When it comes to Apple, we're thinking about things like the replacement cycle. How are they going to continue to be able to offset any expansion in that replacement cycle? Do continuing generations still want those products? Those are the certain things that we're focusing on. So, this isn't something that anyone loves to hear in the short term, but considering the macroeconomic environment and considering the way that we trust Tim Cook, we're still feeling like Apple is definitely a horse in this race.
Well, that's very nice. You picked up the horse analogy perfectly. So let me then ask you, when it comes to the special factors, clearly we know the Chinese economy has been in lockdown as they've tried to address COVID here. To what extent can we attribute most of the decline in sales to China?
Sure. So, if we're going to getting down into specifics, my apologies, it really does depend on how much of their production sort of inventory got locked up in those lockdowns, right? So that's really going to contribute to the weight that we ascribe to that weakness. So if we were thinking about, okay, there's a tremendous amount of production, inventories look okay, but let's say that U.S. demand, strongest market for Apple is looking pretty weak, then we attribute a lot of it to demand. So it really would come down to the state of their inventory sort of over this course that will really tell analysts and investors how much we really can attribute to those supply chain issues. But, if we're going to go ahead and take management's word for it, they're in a much better place now. And that's where we would go forward and say, okay, what's demand going to continue to look like in a situation where supply is looking healthier?
Shelby, I'm not going to carry on with the horse race analogy. I haven't got anything to add to that to you two. So it was great, though, while it lasted. Look, Shelby, if for no other reason at all, this company, everyone got so excited about, Meta's buying back $40 billion of shares. This company buys back a massive multiple on that on a regular basis. Apple has bought back, $500 billion plus in the last decade. I think it used $90 billion, give or take, in 2022 to buy back shares, putting that Meta buyback into some real significance. But my point is here, even if the company was just doing averagely, the fact they're buying so aggressively on their buyback on their own shares as well, is that a reason to buy this stock?
Sure. So on the team, a sort of just the aggressive buyback in and of itself wouldn't necessarily indicate to us that we should go ahead and buy. What it might indicate to us is that management has a certain perspective on the value of their stock out in the market, and they're going to take action on that because it's going to allow them to continue reinvestment in the business and or continue to allow them to insulate in these sort of more difficult macroeconomic times. So, continuing to buy back stock, it's something to support shareholder sentiment. It's a way to continue to, reward your shareholders for support through these tough times. But on our team, it's not necessarily the single factor that we'd be looking at to say, you know what, let's go ahead and buy. But it can indicate that management sees that the market might be sort of underpricing or underappreciating some of their efforts, and they may be taking some action on that. So it's a combination of factors, but not necessarily a trigger point.